in trading education, you know what? Scammers are always going to try scamming. What do I mean by that? And how can you protect yourself? I'm champion trader Kevin Davey, and let's find out. So I was looking at trading books the other day on Amazon, and I called up a list of the top 50 or so trading books. And you can see I have a couple of my own books here. But the interesting thing I found was there were a couple other books that the cover looked exactly like my books. And these books were released after my books were released, so it was obvious what they're doing is just copying my cover because I've had some best-selling books, and they're trying to confuse people. So that's a big warning sign to me. Why not get your own designer to design a unique cover and pay that designer to do it? That's what I did. Yet these people think it's better to copy somebody else's and kind of ride off the coattails. So I'd be aware of those. But it gets even worse. Some of these books, not necessarily with the same covers, are just plagiarized versions of other people's trading books, including my own. I've gotten a couple books off of Amazon where it was obvious that the person took my book and used an article spinner to create their own book. Now, I've reported them to Amazon. Sometimes they get knocked off, sometimes they don't. But if you ever read a book and you think it sounds kind of weird, like the English isn't quite right, well, you're probably dealing with a plagiarized book that just had an article spinner where they spin different words to it. So you got to watch out for that. But back to the cover story. So I downloaded one of these books. I won't tell you which one, but I decided to read it and see. Sometimes you find some good information in it, even though they did copy a cover. Hey, maybe there's something there. So I started looking at this one book, and it was talking about support and resistance lines. Okay, now you may or may not like those. That's fine. But what this person was saying is, hey, if you get a bullish or a bearish engulfing candle with support and resistance, watch out. Don't take it at this point. And the interesting thing is the author included a graphic that showed you, hey, this is why you shouldn't do it. Because look at, here's the bar, and then you can see the support and resistance lines, and you can see how, this engulfing bar wasn't effective at all. Okay, and you might read it and you might say, hey, that makes sense. I see what they're doing. Well, take a look a little deeper. Look at how they drew those lines. Most of the points they used to help draw their support resistance lines were after that candlestick pattern. So really, when the candlestick pattern occurred, you didn't know those support and resistance lines were even there. To me, that's a big red flag that, hey, the person's drawing the chart and then sticks an example on to bolster his argument, when in reality there's no way you could have known that beforehand. So watch out for any charts you see that are annotated, and make sure that what they're saying could have happened in real time, because a lot of times they can't. Okay, so a second thing that I've found that a lot of traders do is the use of market on close orders. Now, I've created a whole other video that talks about market on close, but basically, if you see something, especially in TradeStation, I know they do it for sure, if people are using market on close orders with daily bars, you know they're faking it. And what's surprising is there's quite a few educators out there who show trading systems with daily bars, with market on close, and they say, hey, you can do this. Here, look at this great trading system. And the fact is, you can't do it. You can't trade that system live with real money. You can backtest it, you just can't trade it live. So That's a subtle point. I get it. But that's why you have to dig deep in any kind of educator you look at. Make sure you understand what they're doing and if what they're doing can be done. In this case, it couldn't be done. The third example I want to show you is from a book about 10 years ago. And this author was talking about range breakouts. Okay, and so first he showed an example on a chart. And yeah, I agree. That's a narrow range. It's breaking out. You trade the breakout. Oh, everything's great. But then he showed some other examples. And who would think any of those examples are actually range breakouts? Well, they're not. All it is drawing after the fact to show positive trades and to support his argument that range breakouts are great. But these weren't range breakouts. Nobody would call these things narrow ranges. The first one, yes. After that, those aren't ranges. So again, you got to be careful with what people show you and what could have happened in real time. And you will see this a lot as you look through trading education. People only show you what they want you to see, and if they have a certain argument, they'll show you examples of that. Another good example was there was a guy years ago who wrote a book on position sizing method, and he showed example after example of how great it was. What he doesn't tell you, well, and which he didn't know when he wrote the book, is that years later he used that same position sizing approach and blew out his account. So, what can you learn from cherry-picked examples? Well, you have to take them with a grain of salt. So hopefully this video has helped you. You just have to be a critical thinker whenever you're looking at trading education. And think about, could the person have done what they said they did? And could they have done it in real time? And a lot of times you'll find that they couldn't. If you like this video, please give it a thumbs up, subscribe to my channel, check out my website, and maybe you have some examples of your own that people have kind of fooled you. Send them to me. Put them in the comments. I'd love to hear about them. I'm Champion Trader Kevin Davey, and have a great day.